I've been day trading for over 7 years and I've tried hundreds of different entry models. From scalping, smart money concepts, and even simple price action, it took me years to perfect and learn how to enter a trade the right way. In this video, I'm going to share with you the 3 different entry models that I use on a daily basis, and then I'm going to share with you the pros and cons of each entry model along with the exact criteria I use to eliminate the guesswork out of my trading to make it simple and repeatable. So in this video, I'm going to explain how I perfected my entries the right way, and this is exactly what's allowed me to become a profitable trader. Now, it's important to remember to perfect my entries, it took me 7 years of trading. Trading is not a get-rich-quick scheme. It will take you years to become profitable. However, with this video, I will show exactly what it took me to perfect my entries, but the right way. Now, very quickly, before I get into this video, I have an absolutely massive announcement that I've been working on for the last 6 months, and I will finally unveil it September 9th at 5 p.m. Eastern. Without giving away too much, I made this to help new and intermediate traders learn how to trade the right way. And this will be absolutely free at no cost to you. So if you want priority access and updates to this event, because there will be limited spots, make sure to sign up for the priority access and updates with the waitlist in the link in the description. I will reveal what it is in next week's YouTube video. So make sure you have your YouTube notifications on for Tuesday, September 9th at 5 p.m. Eastern. I truly believe nobody in the trading industry has done this before, and there will be special guests that you will be excited for. Sign up for the waitlist in the description down below, and let's get back into the video. So when we're looking at our entries, there's only 2 things a stock can do. In this example here, we have a clear low, we then have a high, we create a higher low, which means this low is simply higher than the previous low, and we create another high, which means this high is higher than the previous high, which means this is a higher high. And what this means is when we come back for this pullback, well, we should be holding this previous high because this previous high was resistance before, but now it should turn into support for a move back to the upside. So if we're looking for an entry here, there's only 2 things that can happen. Either we hold the previous resistance, now turn support for a move to the upside, or we fail and we break to the downside. Those are the 2 main things that will happen once we enter the trade at this level. But the question for us is, what differentiates a failed versus a winning trade? In this example, we can see this is exactly like this entry right here. However, this one failed to the downside and you would have lost money on this trade. Whereas this trade right here, you can see the buyers came in and we actually made a brand new high of day, which means you would have won this trade. So how can we differentiate between the winning setups and the failed setups, and how can we look to perfect these entries? In this video, that's exactly what I'm going to be covering today. We're going to talk about the 3 different types of entries that I use for my own trading. The first one will be the limit order entry. This is going to be the most aggressive. Then we will talk about the strong price action entry. This is a conservative method. And finally, number 3, we're going to be talking about the strong price action plus confirmation entry. And this is going to be the most conservative. However, for my personal trading, this is one of my favorite entry models. So stay tuned, because first I'm going to explain all 3 of the different entry criterias. I'm going to tell you both the pros and cons of all 3 of these entry criterias, and then I'll show you real examples of all of these entries being used in the real markets. So in the first example here, we have the limit order, and this is going to be the most aggressive entry. As we can see here, like the previous example, we have a resistance here, which will now turn into support when we move back to the upside. And for the limit order, all we do is, because we know we have a level of support, which is this red line right here, we're going to already put a predefined entry in our broker here, which means if the stock hits this level, we will enter in no matter what. If it comes into this red line, we will enter in. We will put our stop loss at a break of the red line, and for our profit target, we'll simply look for a 2R multiple. This means for every $100 that we're risking down here, we have to make $200 of profit when we do hit that target. Now, in this example, it's very important to understand that the second we hit this red line, we will enter in no matter what. To show you a real example of that, here we can see we had resistance previously, we broke above it, which means this now turns into support, and therefore we have that 2R multiple already set up with our profit targets. And now, even even before the price comes back down, we can already have a predefined entry right here with our broker with a limit order. So the second we hit this line, we will enter the stock with a predefined stop loss and profit target for a potential move back to the upside. And as you can see in this example, we touched that previous resistance, now turned support. Buyers stepped up right at that level, and we were able to capture this whole trade back up into our 2R multiple by having that simple limit order. However, let's look at one more example with this. You can see we have that resistance turn support. We see that buyers stepped up. Therefore, all we would do is have our limit order here, and we're just looking for the stock to go back to the upside with our 2R multiple and our stop loss right at the break of structure. Well, in the second example, you can see we would have entered in right as that candle touched this line. However, you can see that there wasn't really any buyers that stepped up near that previous resistance that now turned into support. So this one actually came all the way back down, and we would have actually ended up losing this trade because buyers didn't step in. So what does this mean for the limit order entry, and what are the pros and cons? The first pro is if the trade comes back into your entry, you will get in every time. So you do not have to worry or stress about entering in or being late because you already have the order predefined. The second pro is you will get the best entry. This is because the second the candle touches the level, that's when we're entering, and therefore we have a very clear and defined risk multiple of at least 2R, and this way we will be getting the best lowest risk entry for every trade that we take. We will also always get filled on the bid, which once again correlates with the best entry, as we will get the lowest fill and the lowest cost per trade. And finally, like I mentioned, we're going to be getting that high risk to reward because we're entering at such a low point of the stock for the continuation back to the upside or potentially to the downside if of course you're going for a short position. Now for the cons, out of all three entry models, this one probably has the lowest win rate, and the reason this is because we're going to have our order already set for our entry before the stock even comes back down. And because of this, we can't really gauge what's going to happen at that entry point, and this will reduce our win rates. We may also be prone to fake outs, which means the stock breaks above, comes back for the retest, but really it's just sellers stepping back in, and this move up here was a fake out. With this entry model, this is something you have to be careful of. And finally, we may take unnecessary losses due to the fake outs and not being able to read the price action clearly near the key levels that we need to enter on. Now, these pros and cons will make much more sense when we look at real examples later on in this video. But first, I'm going to summarize all three of these entry models for you, and then I'll show you those real examples so you can see it work in real time. In this example here, now we're going to talk about the strong price action or conservative entry method. And as you can see, there's already a difference on this chart. For this one, we already broke above, but we're coming back for the retest, and we're waiting for the stock to have a candle closure above the key level. So in our previous example, when the stock was up here and we were looking for a potential retest, we were already in the trade. However, in this example, we actually need to wait for the stock to have a candle closure above the key level that we're looking to enter on for a potential entry for a move back to the upside. And this way, this is a little bit more conservative because we are actually looking for the price action on the entry. So in this example, once we see the candle closure, we'll have our stop loss at the break below the key level, and we'll have our profit target still at that 2R multiple. This one is very simple. However, the difference between this one and the last one is we have to wait for that candle closure above the key level, and this will indicate that strong price action and that conservative entry that will give us a little bit more confirmation for our entry for a move back to the upside. So to show you an example of this, you can see the break below the key level, we come back for the retest, and you can see that this candle is actually a weak candle closing below the key level. This is the trade that we would take now because we already see the weak price action for a move back down to low of day. In the previous example, we would have had our predefined entry already on this candle right here. However, for this one, we have to wait for the retest before looking to short the trade. And as you can see, this one we entered in right here, and it had a great continuation down to low of day, and this trade would have worked out very nicely. Here for the upside move, we can see the same thing. We have that resistance now turned into support. We can see we waited for the candlesticks to close. So the first candlestick, we waited for that price action and buyers to step up. We would enter in here for a move back to the upside. And once again, here you can see that strong price action came in, and we were able to capture this trade by waiting to see strong price action near our entry level. Now, in terms of the pros and cons for the strong price action entry, the pros is that we are waiting for the buyers to step in, and this allows us to actually actually see what's going on near the level. The risk is still very close because it's only below the swing low, and therefore this is still a low risk trade. And this specifically means that the risk to reward for the overall trade is still good, even if you're just taking a high of day scale. And finally, you can still get in majority of the time using this method. Now, of course, with the limit entry, because you already have a predefined order, you'll be able to get into that one every time. However, waiting for strong price action, you still should be able to get into majority of your trades, and you'll be able to see that much more clearly when we get into the examples. In terms of the con, this one has a medium win rate, which is about that 50%. So in my opinion, this is about a medium win rate. 50% is right in the middle. Now, this isn't a bad win rate by any means. However, the third entry model that I'm about to show you after this one does have a higher win rate than this. This one still has a couple fake outs because yes, you can have strong price action, but that doesn't mean you are confirming the move to the upside. You can still potentially take unnecessary losses, though not as much as the first one. You can still have those losses because you didn't wait for the proper confirmations. And finally, this one can be a little bit discretionary because it depends on how you are reading price action. And this is where price action is very important. I have made a full in-depth video on price action and exactly how I read it personally as a professional trader. The link to that video will be in the free 10-hour playlist down in the description. However, with this being said, let's go over to the third entry model. So this is the third entry model, and this is the one I personally use the most often myself, and that's going to be the strong price action plus confirmation entry. And this is going to be the most conservative entry that I have. In this one, you can see the resistance and support, but rather than the previous two, what we wait for on this specific entry is the candle to close above the key level, but then we wait for another candle to close above the candle that previously retested the key level. In this example, if this red candle retested, we can see this green candle, and as the buyers stepped in on this green candle and we're pushing this back above the retest candle, this is where we would enter with our stop loss at a break of the red candle and our profit target at that 2R multiple. And you can see this is much more of a confirmation entry because buyers are aggressively stepping up, and therefore this has a higher probability of being support because buyers stepped up aggressively, and we can look for that move back to the upside. And here we can see that entry model being used. We see the buyer stepping up here. We then see sellers stepping back down. You could have either entered in on this entry confirmation right here, or you can enter in on this entry confirmation right here. Both of them, our stop loss would be at a break of this key level right here, which you can see no candle closure below. So we would have stayed in this trade the entire time, no matter if you entered on this first confirmation or the second confirmation candle right here. And we can see that this trade worked out extremely nicely back into high of day and even more continuation after that. We did not hit our stop loss because once again, we have to wait for a candle closure below the key level for the stop loss. I have made a full in-depth video on that in the playlist in the link in the description as well. And once again, here you can see we have the buyer stepping in. We come back for the retest. There is some strong price action, but overall, I'd call this more so neutral price action. However, then the candle came in where buyers aggressively stepped in and closed it above all four of these candles. And now this is where we can enter for that continuation back to the upside. Our stop loss in this scenario would simply be a candle closure below the key level with our profit targets at still that 2R multiple to the upside. And just like that, where we would have entered, you can see buyers stepped up aggressively and we had a very nice move all the way back up to high of day and even more continuation. Now, in terms of the pros and cons, the pros is that this one has the highest win rate out of all three of the entry models. This win rate can sit anywhere from 60 to 70%. You can still risk off your swing low, so the risk to reward is still tight. When we wait for confirmation, we won't have to sit in the trade as long because it shouldn't consolidate as we waited for buyers or sellers to step in, and therefore the trade should work out quicker than the previous trades. And finally, and the most important one, we rarely see any fake outs. The reason for this is because we're waiting for buyers to step in near that support or resistance level, and therefore with that extra confirmation, we should see that nice momentum continuation in the trade. In terms of the cons, this one has the lowest risk to reward to high of day because we're waiting for extra confirmation. Of course, the trade has to move back up and close above the retest candle. And because of this, our risk to reward does decrease. However, we would still look for a 2R multiple after high of day. This will make more sense when we get into the examples. With this entry model, sometimes you may miss the trade because you're waiting for the confirmation. The candle that you're waiting for may close above high of day, and because of that, you may miss out on the trade because we want to enter the trade before high of day or low of day. It can also be harder to buy after a bullish candle as price moves up very aggressively and quickly, and therefore you have to be a little bit more prepared to actually enter in after the bullish candle, and you have to be quick. And once again, because we have to be quick, we're most likely going to be filled on the ask price, and all that means is we're going to be filled at a higher price than we would if we were just putting a limit order in for that low price entry. So now that I explained the 3 entry models, let's go over the key A+ entry checklist before I show you some real examples. All of these entry models need to be used with identifying key levels. Key levels include the previous day high and the previous day low, opening ranges, and key higher time frame levels. When I show you the examples, I'll show you exactly what I mean for these strategies. Number 2, we need to observe price action. Price action is very important in my opinion when we're looking to enter trades. I'm going to show you all 3 of the entry models in the real markets, so you'll be able to see how price action did form for all 3. And finally, candlestick closures is very important, especially for entry model 2 and 3, and I'm going to show you exactly how I use that in the real markets as well. So with all this being said, I'm going to show you all 3 of the different entry models and exactly how I would execute them in the real market, and that way by the end of the video, you'll be able to see how I execute this in the real markets for my own trading. Okay, so on this first example here, we're on Apple, and I'm going to show you the limit order, and that's going to be the aggressive entry. For this one, all we're going to do is mark out the first 5 minutes of the day, and this is going to be the opening range strategy. Now, I have a full in-depth video on this that I've already made on my channel that you can watch after watching this video. However, all we're going to do is mark out the high and the low of the first 5 minutes, and what we're going to look for is either a break above the 5-minute high or a break below. So for the limit order entry, first we have to wait for either the break above or the break below. So let's see which entry we get. And in this example here, you can see we had that 5-minute high and low. We broke below the low now. So now with the limit order entry, we're not going to wait for confirmation or look for strong price action. We can already preset our entry. So we would look to go short as soon as the candle touches the 5-minute low. In this example here, our stop loss can simply be a break back above this structure. And we need to look for at least a 2R multiple, exactly like how I explained. So let's see if we get an entry. Okay, so as you can see right here, because we had that limit order placed, when this candle came in, that limit order got triggered, and now we can see we're risking about $220 for a potential $710 in gain if we come back down into low of day. However, we got into this trade based off of our limit entry rather than waiting for price action. So let's see how this trade plays out. And as we can see here, in about 4 minutes, this candle went from this 5-minute low all the way back down to low of day and showed nice continuation. Now, like I said, the benefits of this entry model, right when we touched the 5-minute low, we entered and we got that nice move down. However, if we waited for the strong price action entry model or potentially even the confirmation entry model, we wouldn't have been able to enter into this trade, because right as the stock started showing weak price action, it was already at low of day, which would have made it very, very difficult to enter, especially with the risk to reward, and we would have had to avoid this trade. So remember, with the limit entry model, it will always allow you to enter the trade. However, you won't be able to look at the strong price action or the weak price action when your entry is actually coming back into the key level, which is important. However, you'll be able to enter the trade whenever you plan it. So with that being said, that's the limit entry model. Let's go over to the second entry model. Here we are on the second trade, and on this one, we're going to be looking for the strong price action entry. Now, we can see the first 5 minutes of the day playing out. So we mark out the 5-minute high and the 5-minute low. Now we have to wait for the stock to either break to the downside or to the upside. We can't just enter. We need to wait for strong price action on the entry. So let's see exactly how price plays out. As you can see here, we broke below the 5-minute low there, but we didn't enter in. This is much more consolidation, and there was no strong price confirmation for us to enter in. Rather, this was just consolidation, and we were able to avoid this entry. Now, Now, here is the actual entry potentially setting up. We've finally broken above the 5-minute high. Now what we're looking for is the retest. We're going to wait for strong price action near this retest for a move back up to high of day and continuation. And just like that, you can see here's the strong price action. We see buyers stepping up, the retest, and on this candle right here, you can see a very nice bullish candle above the 5-minute high. This is where we can enter in for a long position, our stop loss at a break of that candle, and we need to look for high of day or at least that 2-hour multiple. In this example, high of day gives us a 2.68, so we can enter into that long position here. We are risking about $730 for a $1,840 potential gain. Let's play out the trade and see exactly what happens. And just like that, we were able to capture this full trade by waiting for the strong price action and then entering in for a move to the upside. This is the exact same trade that I took live in front of hundreds of traders in the accelerator and traders lab, where I live trade every single day. And I do this to not only be transparent, but traders can learn how I trade and execute my trades in real time using these entry models as well. Now let's go over to the final trading example, and that's going to be my conservative and favorite entry. Okay, so here we are on the last example. Now we already have the 5-minute high and low drawn out because that's the strategy that we're using in this video. However, this is the strong price action plus confirmation entry. What this means is if the stock breaks above this level, retest, we need to wait for a candle to close above this previous retest level to enter in for continuation to the upside. Let's see exactly how this plays out in the real market, and this way you'll be able to understand how I personally trade using this entry model. Okay, so here we're getting the breakout. Now we need to come back for the retest. Okay, so here's the retest. We can see that buyers brought the stock up. We're retesting for the strong price action plus entry confirmation. We cannot enter in on this candle. Now what we need to do is wait for a candle to break above the retest candle. And what that will show us is buyers are being aggressive and they're pushing the stock back to the upside right off of this key level, which will increase the probability of this trade working out in our favor. Let's see if we can get that confirmation entry. And right here, you can see this candle actually ends up closing above the previous down close candle or the retest candle. And this is exactly where we will enter this trade with our stop at a break below the retest candle. And we need at least a 2-hour multiple. Now, one thing that's important to mention is that this candle, you have to wait for the confirmation before we enter. And this does require a little bit more patience. However, once you see the entry, this is where you enter once you have the confirmation above the retest candles. So let's enter into a buy position here. We're risking about $640 to make $1,150. Let's see exactly what happens. And we can see just like that, after waiting for that confirmation entry, this trade hit that profit target and we were able to capture a nice trade waiting for confirmation. And once again, this is the exact same trade I took live in the accelerator and traders lab in front of hundreds of traders. With this being said, if you want more information on exactly how to start day trading as an absolute beginner from scratch, make sure to click the video on screen now. Make sure to like this video if it helped you. If you have any questions, put them in the comments down below. Subscribe to the channel and follow me on Instagram and Twitter for more education. And I will see you next week with a brand new video.